What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we see a continuation of the bulls pushing as the shorts continue to be squeezed. How much higher can this short squeeze rally go? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.64% as SPY did get that close back over the 50 EMA, which was a critical resistance level at 394. So we continue to see the bulls pushing on decent volume as shorts are starting to squeeze as the bulls break out. Now from here, there's still going to be one more critical resistance we need to clear before we can fill that gap, and that is going to be at SPY 396. So for that reason, it is possible that the bulls need to build a flag between 390 and 396, so don't be surprised if we do go into a little bit of a trading range and go absolutely nowhere for a few more days before we get the breakout and fully close the gap at 401. Now if we go straight to blasting through 396, we are going to fill that gap very quickly because there will be no resistance between 396 and the gap fill at 401. Now once that gap is filled, it could instantly act as resistance, so do keep that in mind, but we are very likely going to continue to see shorts getting squeezed as we break through every single resistance level. And I still do think it's very likely that SPY is trending up to the previous daily highs with an upside price target right around SPY 416, and that is very likely where the majority of the bears have retreated to. So if you are shorting this market, just keep in mind that your risk is only well defined at much stronger resistance levels which are higher up, unless we do see that clear rejection at 396. But even then, we're very likely only going down to about 390 before we find more buyers. Keep in mind, there's a lot of psychology that goes into trading and there's still a lot of bearish sentiment. So there's going to continue to be people trying to short this market as we're getting the breakout, which is the exact opposite of what you should be doing. You should not be trying to short a breakout hoping that it fails. You should wait for confirmation that it fails and some type of rejection, and then a break back down below SPY 390. So above SPY 390, I still believe you need to stay bullish with the next bullish breakout above 396. There's really nothing else to say about the chart because we do have the bull trend with the daily higher lows and the daily higher highs, so we are very likely going to continue to see a push in this bull trend. If we do break down below 390, the next critical support is down here right around 384, so do keep that in mind if we do see a breakdown through support. On the Nasdaq 100 triple Qs, we were up 1.59% as the triple Qs got their second day in a row closing above the breakout and back over the 50 EMA. So today was your confirmation day that this was the real deal breakout. The next critical resistance to break on the triple Qs is above 304, and above 304 we will very likely start running all the way up to about 320, even though we will have resistance right around 313 to 314. So just keep that in mind. If the triple Qs break out above 304, we are going to see a very impulsive rally to the previous daily highs and possibly even break out and go higher than that. So for that reason, the bear has retreated to higher resistance levels and you need to stay bullish on the triple Qs as long as we're above 296. We could go into a trading range above 296 and below 304 until we get the bull breakout, so do keep that in mind. And if we do lose support at 296, we're coming back down to about 290. So keep in mind, if we do lose support at 296, we'll very likely come back down to our 20 simple moving average. If you point your eyes to the bottom of the screen, you can see that we did go up on increasing volume. So we are continuing to see volume behind this bullish push higher. And that is going to continue to cause shorts to squeeze out of their short positions as the bulls break through resistance. This is a bull trend of higher lows and higher highs. So do not short a bull trend. Wait for some type of rejection and confirmation of a breakdown through support before you start getting bearish during a bull trend. Trying to short a bull trend is not the right way to go about this rally because it could still have more legs to push higher. In the Dow Jones, we were up 0.2% as the Dow Jones got the second day in a row closing back over the 50 EMA. And as you can see, all of the indices are breaking back over their 50 EMA, which is a bullish indication that price action is starting to break out of the downtrend. The Dow Jones have the higher low, and intraday we did have the higher high, and we're starting to push on that gap above that doesn't fill until we completely go all the way up to 323. Above that gap fill will likely go all the way back up to the previous daily high at 333. So keep that in mind that the Dow Jones is bullish as long as we are trading above this breakout right around 313, and that is going to be the most critical support in the Dow Jones. If we lose critical support, we could still fill the gap below at 307, but keep in mind in the short term, the bulls have all of the momentum. so it's very likely that we fill the up gap before we go down and fill any down gaps. On the Russell 2000 IWM ETF, we were up 1.57%, and the Russell 2000 did get the bull breakout back over the 50 EMA for the second day in a row and back over our resistance trendline. So IWM is very likely trying to fill the gap at 183.5, and above that retest the daily high at 191. Critical support in IWM is down here at 178, and as long as we are above 178, you need to stay bullish in the small caps. And if we lose 178, we still have that strong support at 175. So as you can clearly see, all of the indices are getting the bull breakouts with the price action, which is going to continue to trigger short squeezes. So do not be part of the short squeeze, have a plan, and that should not be shorting a bull trend. If you want to short this market, wait for a clear rejection and then breaking down through support, and that will be the evidence that the market is weak, and then you can try shorting the market yet again. On the ARKK ETF, we were up 5.07% as ARKK did get that bullish breakout above $47 on increasing volume. So we are very likely going to see the short squeeze in the ARK ETFs on this bullish breakout, which should easily send ARKK into the $50 range. The next critical resistance will be 52, and then above that we have critical resistance at 55, and we have strong support now at the breakout at 47 and the 50 EMA at 45. So keep it in mind, this is a risk on sentiment when you get an ETF like ARKK breaking out. So this is not a sign that it's time to short the market. This is a sign that is risk on, and the market is likely going to continue to run. On the VIX, we were down over 2.5% today as the VIX continues to get crushed, continuing into the bear trend and closing the first day down below 24, which is a bullish indication that the market's ready to head higher. If we see the VIX closing below 24 yet again tomorrow, and we break those critical resistance levels, we are very likely going for that next leg higher, so do keep that in mind. This is still a very close breakdown, and we're still very close to that support at 24, so it is still possible the VIX could spike off this level, and we'll be getting a lot more bearish if the VIX closes back over 27. On Bitcoin, we're currently flat, going absolutely nowhere, with Bitcoin finding resistance around the 50 EMA. But if you look at the Bollinger Bands, Bitcoin was just going way too far, way too fast, and was getting too far extended outside the upper Bollinger Band. So this is really just a cool down period, and there's nothing bearish about Bitcoin going sideways. So look for Bitcoin to try to build a base around this upper Bollinger Band right around 23,000 before the push to 25,000 and then 28,000. And I do think we could go as high to test that resistance trend line at 30,000. You're staying bullish on Bitcoin as long as it's above 22,000, so it doesn't get any simpler than that. On NVIDIA stock, we were up 4.8% as we continue to see that high volume NVIDIA that I did tell you was more than likely telling us NVIDIA was ready to run, and we continue to see NVIDIA pushing higher on higher volume. Keep in mind, when you see high volume buying, you never want to get bearish on a stock that's breaking out, and we saw the breakout on NVIDIA on increasing volume, and we're very close to closing that gap, which is just above 180. We're back over the 50 EMA, we're breaking through resistance, we have the higher low and the higher high, and we are developing the bull trend. So it's very likely that NVIDIA is going to continue to push higher back up to 196, as long as we're trading above 172 and 161. So set that as your critical support levels to pay attention to. On Tesla stock, we were up 0.8% as Tesla is trying to break out above that very critical resistance, which is now at 743. And if we get the close above that level, we will get the bull breakout, and we'll very likely see Tesla running all the way back up to about 828, with resistance on the way there at 775 and 798. Critical support on Tesla is down here right around 715 and 700, and as long as we're above those support zones, you do want to continue to stay bullish. If we break back down below 700, look for a retest of the bottom of the consolidation wedge right around 660, and the previous low of support right around 620. On Apple stock, we were up 1.35% as Apple got the bullish breakout to a new daily high, so there is no way the market moving stock of Apple breaking out is going to be anything other than extremely bullish for the rest of the market. The next critical resistance is up there at 156.5, so it does look like we have a little bit of a blue skies run above 150 until we get to that resistance, and I still think it's possible that Apple is trying to get up there to close that gap at 174. You can very clearly see with the moving averages and the price action, there is a lot of bullish momentum, and it's all occurring on very decent volume, so you need to stay bullish on Apple as long as it is trading above 146. On the financial sector, we were up 0.37% as the financial sector is beginning to show the bullish breakout look back above the resistance trendline, and the next critical resistance will be the 50 EMA and then the gap close above. You can clearly see the bullish breakout with the higher high on the daily chart on closing prices after the triple bottom look off of support. On the industrial sector, we got the bullish breakout today, going up 0.77% and closing back above resistance and finding resistance just above at the 50 EMA, and we still do have 2 gaps to fill to the upside. The healthcare sector was down about 1%, closing back below all the moving averages as it continues to consolidate around the 50 EMA. Look for the breakout above 131 for the next bullish breakout. The energy sector was up 0.97%, getting back over the 20 simple moving average for the second day in a row, as it's likely going to continue to push to test resistance at that 50 EMA. As long as it's above $70, you can stay bullish for the retest. So jumping back over to the S&P 500, keep in mind that the bulls are pushing as shorts are getting squeezed, which is the perfect recipe for a very impulsive rally. If we do start to consolidate from here, look for that trading range between 390 and 396, and I still believe you need to stay bullish while SPY is above 390, so do not overcomplicate it. It is really that simple. Use great risk management and continue to respect the fact that we do have a bull trend in the short term, and I never suggest trying to short a bull trend unless we see the official rejection and the breakdown through support. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.